Hello.
Hello.
Okay, here's one for you, Ville.
Mm-hmm.
How many Bitcoin miners does it take to change a light bulb?
A completely redundant amount, I guess.
1 million. One to change it and the rest to verify he did it.
Oh. Hello and welcome. This is episode 2 of Fintech Daydreaming. I'm your host, Ville Sointu. I'll be your host for today, and I'm, as always, joined by my co-host, Paul Krogdahl. Hi, Paul.
Hey, Ville. Nice to chat with you again. I'm really looking forward to this.
Yeah, episode 2. Let's see how this goes. So, our guest today, David Grundy. David Grundy is the group head of DLT and blockchain at Danske Bank. Hi, David. How are you doing?
Hi, guys. Yeah, doing good.
Nice to meet you, David.
Yeah, nice to meet you, Paul. Okay, I guess just before we start, it's probably worth me mentioning that, the views that I represent here are my own rather than my bank's. And we can go from there.
All right. And as you could probably guess from the title of our valued guest here, today's topic is going to be blockchain. And I know that we, in the episode 1, we actually have a discussion about banking platforms, the platformification of banking in general. And indeed, that is a topic that is coming down the line. And, we are trying to line up some interesting guests for that episode. But because we had a chance to have David already here for episode 2, we decided to, take a stab at on the blockchain topic first. So the topic of the day is really what we call the blockchain. Now, this is an interesting topic from many angles. So first of all, my role in many of the companies that I worked and still work today is related to blockchain. So I've obviously kind of been through a journey on the blockchain topic. The kind of challenge with the blockchain really is that when you talk about the blockchain, you don't simply talk about the blockchain because everybody has their own opinion about what it is. If you talk to people associated with, for example, the Bitcoin world, I mean, they want to see it as the kind of enabling technology behind the Bitcoin or the digital cash movement that they are kind of really believing in. And then if you talk to bankers, it's probably just the annoying thing that the innovation departments keep on talking about all the time, but they really don't understand it. And then when you talk to the bank's innovation departments or the business people inside the banks, they see that as a distributed database, more or less, that actually allows for something interesting to be done that perhaps couldn't be done before. And then when you talk to the skeptics, the people who are really deep into the technology, they really see it's just as a networking protocol. They don't really see what the big thing is about, and they actually start to talk about we could do this in a much more efficient way. And so it's a spectrum. For some people, blockchains are networks. For some people, it's the religion of a new world order and a new hierarchy for money, if you will. And ultimately, even for the big tech companies and social media companies, it's perhaps a gateway into building some kind of a globally accepted currency, perhaps in the future. We'll see. Today we'll have a discussion about all or some of these topics. We'll see how far we get. One thing is for sure, there will be things that we will not be able to cover in today's episode, and it's probable that we're going to have deeper dives into specific topics about blockchain in future episodes. We'll see how it goes. Let's see what the feedback is about this episode first, and we'll see which things might be worth going deeper into later on as well. But on to the discussion after this brief introduction. So, David, Paul, we've all been working on the blockchain topic, obviously, for quite some time now. And I could probably say that we've seen a thing or two, for better or worse. So we could start from any question. But I guess the obvious question that everybody's thinking about, especially if you're kind of been around the block a few times with these blockchain topics, is that what really annoys you the most when people start talking about the blockchain?
Fantastic. I love it.
Yeah.
Great question. I think, David, I'm going to let you start with that one. That's a cool one.
Yeah, I think it's I think like you highlighted in your intro, it's an interesting topic because it means so many things to so many different people. And I think it depends on who you talk to. I mean, like right now, I think my I guess biggest issue or bugbear with it is people's lack of awareness in terms of what it means to be able to get this technology live. Right. That's one of my sort of big issues so far. I mean, I spend a lot of my time on the education space, for the last couple of years, like really explaining what blockchain is, what's capable of doing, what is it all about? And, we've obviously got the hype factor as well. But the big thing that sort of gets to me a little bit more than most at the moment is I see a lot of proposals, a lot of presentations where they talk about the tech, but they don't really cover the topics of, how do we make it real? How do we make it live? I guess that's kind of an issue for me, but yeah, maybe I'm just getting old.
It's called being pragmatic, my friend.
Yeah, maybe, yeah. So yeah, it's an interest, but like you said, I think the key thing is what you said early on. It means many different things to many different people, depending on your technical competence, what you believe in, what you don't believe in. It's a really interesting topic in many ways.
I think I would agree with that. I've gone on the journey as well, like you're saying, David, from quite early on. I was doing a lot of enablement around blockchain, probably about 4 or 5 years back. And I think going through this journey, I think you're right that there is extremes from one side to the other. There's some people that have the notion that blockchain really just only is about Bitcoin and permissionless public networks and censorship resistance and everything else. And anything else that we talk about in this area are just blockchain by name. That they're not really blockchains, are they?
Yeah.
All the way up to the ones that think that blockchain is going to solve everything. It's a silver bullet. It's a technology that's, that notion, I've got a blockchain hammer and everything I'm facing is a nail that I can hit with it. So I think the ones that, or the discussions that end up becoming very religious or political, like you were saying, Ville, on one extreme or the other, tends to frustrate me a little bit. But we're all entitled to our own opinions. We're all heading in a interesting new direction. I think blockchain is still in its infancy, and there is a journey to still continue going in. And I'm really looking forward to following through this journey.
Yeah, I think that is a key point as well. Is I mean, the hype's built this up so much over the years that people often ask questions. What has it done? Where is it? And but it is still in its infancy, and I think people in the field understand that, and I think people understand this as a long play rather than an immediate effect. But I think one thing that people don't realize as well, though, is the amount of effort that's gone into this space and what that has resulted in. There's been a massive leap forward in cryptographic solutions and theories and other associated technologies with this. They've really made leaps and bounds forward, right? And I think that can only be a good thing. And I think when you look at that in terms of other potential solutions, like blockchain combined with something else, or blockchain combined with IoT, whatever it might be, it's always a journey. It's always a step forward, right? And you always learn from mistakes, and you also learn from the positives as well. So yeah, it could be interesting.
Yeah, absolutely. And I think another thing that's quite critical here is the fact that we've got lots of different flavors of blockchains or DLTs, distributed ledger technologies out there, because that competitive drive is what's really making us push forwards at a faster pace.
Yeah,
competition is actually very good at the moment, and I think that's something we should embrace. Continue to support the various types of blockchains.
It is. Are you worried at all about the fragmentation, though? Are you worried about that we get to a point where we've got so much diversity and so much everyone doing their own thing that we don't really step forward because everyone's kind of competing too much, and actually the whole technology requires collaboration in some form. So
I think I'm drawing a parallel back to the early days of internet web application servers, right? There was a proliferation at the beginning, quite same as what we're having with blockchain, that there were people going off in different directions. But we started aligning ourselves to certain standards and those sort of things. And eventually you got to a certain level where there was interoperability, right? You could take elements from one web application server and deploy onto another. Yes, there was some inconsistencies, but we ended up in a place where it made sense. And I think blockchain is going to do the same. I think we're going to spread out, but there's going to be a unification that happens. And that's part of this competitive journey that we all have to go on. I think that's a positive thing.
Yeah, I think, but you know, one of the kind of key things about the whole blockchain conversation and all the crazy things that's happening is that it's very, very technology driven. And I think, you know, it lends to the points that you made earlier, David and Paul as well. That, you know, when you talk to, you know, about the annoying things that, you know, when you talk to blockchain companies, I mean, they usually use blockchain shorthand as a shorthand for basically not doing their homework on the business that they're proposing on the blockchain. So they effectively are saying that, you know, we don't need to do XYZ because we have this blockchain. And then when you kind of dive deeper into the blockchain, well, it really is not even a network. So it's a technology solution. Now, in terms of interoperability, I mean, it's the same conversation all over again. Interoperability is not a technical exercise. It is a business decision. I mean, ultimately, when you build these networks, you know, powered by blockchain, DLT and such, I think the decision to actually make those work together is driven by business rationale. So, for example, having worked with trade finance for a while now on the blockchain network side, I mean, you know, again, it just makes business sense to make these networks work together. And I think that's the way we will reach interoperability and ultimately even the technical standards. It's business first instead of technology first, which again is a bit of the annoying things that blockchain brings with it, at least in my mind.
No, I definitely
agree 100%.
Yeah. One question though, one thing I have seen in a trend which I was quite happy about, but I'm also a little concerned about, is we probably all do the same. We collectively, to a lot of students, you know, master students looking at, you know, innovation technologies, and they've obviously got a keen interest in the blockchain DLT, and I see lots of presentations from them. And I think it's really good that we're educating, you know, on these technologies at that level, you know, through the school system and into the education system higher up. But one thing that still concerns me is they always ignore legacy, or they always ignore the existing systems, and that really worries me. They come with a proposal that says, "Hey, this is going to change the world," but a lot of them don't know what they're changing, right? And in terms of adoption and in terms of moving this technology forward and you know, really benefiting from it, it's great to say this is the new, and that's fine, but we need to understand what problem we were trying to solve, and also, you know, how do we move? How do we migrate to that new system? It doesn't just happen overnight, right? And that's a big. I've talked to a number of universities about this. And like, are you teaching these students about the legacy, what the issues were, what the problems were, like, and even again coming back to this question of, okay, if that's the problem, how do we change it, and how do we get the steps to go live? How do we make this real? And I think there's a gap there. So.
Sure. And I think that's actually an interesting segue to, you know, the second question, or the second kind of topic that I wanted to cover in this conversation, which is smart contracts. I mean, you know, it's one of the things that, you know, I guess, you know, fueled the hype, which the enterprise blockchain hype, which started in 2015. So we cannot really not talk about it. So on the topic of smart contracts, I actually, you know, happened to read an interesting paper on this topic this week. It was done by the London School of Economics called Cloud Crypto Land, written by Edmund Schuster, who is an associate professor of law at London School of Economics. For the listeners, I'll put the link to the paper in show notes, so you can have a look if you want to. But in this paper, Professor Schuster kind of concludes that you know, especially when it comes to permissionless blockchains like you know, the public Ethereum network, or any kind of these you know, smart contract enabled networks, having a kind of a globally applicable law and lawfully enforceable agreements or contracts kind of done with a digital representation in these networks is practically impossible. He also talks about that the solutions for these problems, for these permissionless networks and the incompatibility with legal frameworks on a global scale can be solved by going into permissioned kind of setups, but then also proceeds to argue that the permissioned networks might actually not make that much sense, because it removes the only benefit that, in his mind, blockchains have, which is the nature of it being permissionless and trustless, which is a thing that you will automatically lose, of course, when going into these kind of closed networks like banks tend to prefer to work in. Now, I guess, what he tries to say is that smart contracts are, neither smart or contracts, which is something I fully agree with. I think they're more like digital, scripts that both sides agree on more than anything else, or even in the best case. But at the same time, we're seeing like, the DeFi movement or the decentralized finance movement, where, all sorts of crazy people or, smart people, if you will, all around the world are creating these kind of new kinds of financial instruments powered by quote unquote smart contracts, typically on the Ethereum blockchain, even though there are others as well. Now, what do we think about this DeFi space and smart contracts? I mean, is this just, some tech kids messing around, or is this the future of finance? What do you think?
I think this topic, you could spend hours on this topic alone, right? But I think it's interesting always to experiment. But I think, as you highlighted from what you read, the legality of smart contracts and jurisdictions and enforcement of decisions or court orders within that technology stack is a challenge. Does it have a place in different, decentralized finance? Possibly. I mean, if you look at it from if a contract could be represented in a pure mathematical form that's unambiguous, because maths is, then maybe there's some validity in this. But then again, you come back to the public versus private, right? What sort of technology base do you do this on? So I would say it's interesting to experiment. I think maybe it has some place and there's some interesting applications for this, but I don't think it's going to completely displace everything that's there at the moment. There's going to be elements taken and elements.
I think, first of all, I don't think we've seen the killer app yet of blockchain. I think that still has to come. It's part of this notion, again, that blockchain is in its infancy, and we've got a journey to go on until we realize the new business values. And it goes back to what you were saying earlier, David. Blockchain is more about finding the right business cases and looking at it from a business perspective rather than a technology perspective. But I think also there is a slight element here of interpretation. Maybe the term smart contract carries with it some misconceptions. I think if we look at it from a very simplistic point of view, Ville, there is some element of contractual agreement that's happening between two parties that can be represented in executable code at a very simplistic level. And I think putting that into machine code that says, if I do this and you do that and we reach agreement, something will happen. That is, to a certain degree, contractually agreeing on something. But when we move it into the legal world, the legalese, then I agree. It's very difficult to say, will this stand up in a court of law, etc. So maybe the terminology is wrong. Maybe it shouldn't be smart contract. Maybe it should be smart agreement.
Yes, I think even Vitalik Buterin said that this should be more like that. He would prefer the term like persistent scripts or something like that, rather than smart contracts, which is exactly what it is. I mean, it is a digital representation of an agreement between parties. Now, I think where this gets complicated is, well, first of all, if you cross jurisdictions, so if I make a digital agreement or a digital contract, whatever you want to call it, with somebody from Australia, from Finland, then you have two legal systems that effectively don't recognize this digital agreement unless specifically agreed that it is something that is done. The problem of these things cross jurisdiction is really the fact that you will lose. There is no real legal recourse. I mean, we can agree between two parties. We can agree, between us that, we will respect that, whatever is on the blockchain is the agreement between us, and, whatever happens. But then when you reach a dispute, I mean, that's when you typically, as a human being, you fall back to the legal system in the country where you are living. And, you expect legal recourse, and you expect to be able to, recover whatever wrongdoing was done for you as far as you're concerned on that contract. And I think this is where the gap happens. So, you hear all the stories about people losing their Bitcoin or, losing all of their money in a smart contract or that they had on the Ethereum blockchain that had a bug in it, for example. You do what you do there, in the digital world, but then there is no legal recourse. There is no government kind of guaranteeing that, everything will be done fairly in those setups. And it's because of that, we're having these conversations that, we should have regulation on the blockchains, and, we should have cross-jurisdiction kind of digital kind of agreements between countries. But as said on this paper, I think that's extremely difficult to achieve because there's so different kind of setups and environments in all of the countries.
Yeah,
but maybe.
Sorry, Val,
I was just going to say maybe. Yeah, that's all right. I was just going to say maybe. I mean, we're in a grey zone, right? And I think things are going to evolve and change as we move forwards. Today, if you get into a dispute, then an agreement made between two parties via email is seen as a legally binding agreement in one form or another. So I think it's the law keeping up with technology. But then I'm not a legal person, so
yeah,
what do I know?
I guess there's different levels to this as well. I mean, even the construct of a contract, you could argue, is it legal to begin with? Or there's certain things that you just can't agree to because the law doesn't allow it. So, and then who's responsible for that enforcement, at a basic level? You're not even talking there about what if something happens that goes wrong. It's like, was the contract even legal to begin with? There's recourse needed there. But also, I guess, and maybe, I know you're a little bit into this space as well, it's degrees of, smart contract, right? So an IoT device that has a smart contract, a very simple function, simple process, so is it depending on how complex the service you're trying to deliver is? Is there any meaning to that? Is it an IoT device that's just trying to automatically order something, for example, versus a large, complex financial product at the other end of the spectrum? And I guess evolution is going to tell us this, right? I mean, what's going to be acceptable, what isn't, and what's going to be realistic and what isn't.
Yep, agreed. And I think there's an interesting discussion to be had around, how do you actually kind of integrate legal systems or legal frameworks in different countries into these digital representations, decentralized or not. And I think that's perhaps a topic for a completely other episode, perhaps. So we'll see if we do that in the future. But since we're kind of running out of time, so I need to move us to the next topic, which we absolutely have to cover, because obviously today especially, I mean, there's no discussion about blockchain or cryptocurrencies these days without actually mentioning Facebook's Libra project or the ever ongoing saga of central bank digital currencies. Now, in my mind, at least, neither of these things, neither Libra or central bank digital currencies have anything to do with blockchain. But because, these are typically linked together, at least in people's minds and, in the narrative that you read in the papers, I think we need to cover these topics in this conversation as well. So perhaps, Paul, maybe you could try to take a stab at explaining the difference between a cryptocurrency like a Bitcoin and what could be a central bank digital currency. Why does it matter that these things are different, and how are they different?
Of course. Yeah, I'd love to do that. So, I mean, I'm actually going to cover it off in three different buckets because I think it fits into three different buckets. If we start with cryptocurrencies, at the end of the day, they are, as we've already mentioned, unregulated. They're censorship resistant. They're based on a permissionless network. It's accessible to everyone, and it supports anonymity. It does try to follow cash and the way that cash works in the real world. And that was the purpose of it. It's not backed by a sovereign state either, right? So it's in effect a made-up currency. It's not supported by any central bank or any sovereign state. And let's be honest, at the end of the day, whether you're talking cryptocurrency or central digital bank currency, they're all based around cryptography at the end of the day, stored in a database or ledger or something else. But a central bank digital currency is a representation of the currency supported by that country. So it's issued by the central bank, connected to the fiat currency, and it's a digital representation and therefore regulated by the bank and the sovereign state. But there's also a third one, which is a lot in discussion now, which is stablecoin, which if we look at the difference between stablecoin, central bank digital currencies and cryptocurrency, stablecoins in effect are the same as cryptocurrencies. But there is a slight difference here, right? A stable coin is trying to act the same way as a central bank digital currency by the fact that it's backed by a stable asset. So, for instance, you could say that you issue a stable coin which is pegged to the fiat currency of the US dollar, for instance. So this is a way for private or third-party individuals to release a digital coin which has less risk and less flexibility, which is where Libra sits, right? So Libra is a stable coin connected to, or they want to connect it to fiat currencies to be able to reduce that flexibility. And actually, talking about this, an interesting article was published yesterday on CoinDesk, reporting that China has proposed plans to create a stable coin between Japan, Korea, Hong Kong, and China. And I think this is an interesting one as right? Because it will. They're proposing a stable coin that will bind the APAC economic leaders together. Again, the difference here then between Libra, for instance, and this stable coin is that the stable coin that China is proposing will be governance supported by a government authority rather than a third party or a private organization.
Now, it's actually, again, maybe we have another episode coming on the topic of stablecoins and digital currencies in general. I think it's a very, very deep topic that we should get into. In my mind, the difference on all the three great kind of categorizations that you did is that it's the difference really is in governance. So, you could argue that the permissionless networks don't have any governance, even though I could argue that they do. And then, the central banks are centrally governed. So, effectively they control. It's almost like an account system, if you will. And then the stable coins, I mean, these are the things you create on these permissionless networks. And then, it ultimately boils down to how much you actually trust the institution that is issuing those quote unquote stable coins. But yeah, a super interesting topic. But let me bring it back to Libra a little bit. So, I mean, David, you and me, we both work for banks. So I guess, one of the unfortunate or fortunate duties that we've had in the past year or so has been that we've had to explain Libra and, blockchain and cryptocurrencies many times to our dear bank colleagues. Now, I'm going to put you in a scenario here, so be ready. So imagine for a moment that I am the CEO of your bank. Could you please explain to me why I should be worried about Libra, or maybe why I shouldn't be worried about Libra?
Okay, yeah, no.
That's a good one.
That's fine. Actually, it's a bit of a side point, and I will answer your question. But I actually explained Libra to my mum
that's even better.
Yesterday.
Higher authority,
and it was the most. Yeah, exactly, higher authority than now. Yeah, but it was the most bizarre because I was sitting there thinking, what analogy could I use to make it really, really simple? And I don't know whether you guys had this, but growing up, we had store voucher cards,
yes.
And it just suddenly came to me that she would get that. I said basically, what happens is you buy vouchers that you can then use with participating retailers, right? So back home, originally it started with one store when I was growing up, and then a group of stores got together, and so you bought into this system and you bought £10 worth. And that you had £10 of vouchers, and you could go into those stores and use your vouchers instead of the cash because they were representations of cash. And she actually said, "Oh yeah, that makes sense. Okay, I get that." Now that ignores a large part of the governance and the complexity and the backup and all the rest of it. But in its most simplest form, I kind of panicked when she asked me because I was like, "This could be a long conversation, right?" And I just used that simple analogy, and that was it. It was kind of like, "Oh, okay." So, it's you buy something and then I can use it to buy other things if they participate in that program. Yeah, that's pretty much it.
Makes sense.
Okay. And it was quite unique. But I guess the CEO's perspective is going to be, look, obviously they're used to a financial system, especially within banks, they're used to products and services. I think the biggest concern, I would say, for financial services organizations, and if you look at it from a CEO perspective, is what interactions with the customer does that give me or doesn't it give me, right? And from a Libra point of view, it removes, a number of touch points with the customer. Effectively, if you look at the model in a very simplistic way, you buy into the Libra system, then you're in the Libra system. Right, you purchase and you do all your interactions within the Libra system for anyone who is willing to participate in that system. And if you're a CEO, that's probably going to be a concern because you're probably going to be looking at, well, not only is the payments that I know at the moment, but what other products and services are going to be launched? Is it going to be loans? Is it going to be credit? Is it going to be mortgages? What is it? Where is it going to start? And where is it going to stop? So, and then there's also the view that this, some CEOs probably say that this isn't going to take off, right? I mean, it really does. But I guess the danger is that it's going to what is a threat to the customer interactions is probably going to be the foremost concern.
Yeah. I like the analogy to these stored value cards, especially because the whole regulation around e-money, for example, kind of came out of that. When it was yes. Not so super clear on what is the role of these kind of stored value cards, and what is the kind of how can you actually convert between that cash and those stored value cards? So that's why in the European Union they came up with the e-money regulation. I mean, that's one of the reasons. Obviously, it's a broader landscape of the discussion of why it came about. But perhaps that is a reflection of how Libra will be regulated in the future. Maybe it should be regulated like e-money. But anyway, that's again a topic for a completely other discussion.
Yeah, I mean it's funny because when I was a kid, I used to get these vouchers and. I used to go in and buy, I'd buy something and then I'd get given vouchers back. And I don't know why, but that really annoyed me. I really wanted cash back. I really wanted to be able to go outside of that network and buy in some other stores, but I got the same vouchers back to use.
All right.
Strange.
Any last comments on this topic, Paul, before we close it?
No, I don't think so. It was just a very small one around what you were saying about regulated and e-money. I believe, and I could be wrong here, and maybe some of our listeners can validate this, but to be able to issue stablecoins, generally you need to be able to trade them, to have an e-money license. So from that perspective, Libra is going to be issued as a stable coin. They want to tie it to fiat currencies in different countries. So from that perspective, I would assume they will be regulated under a e-money
or
license.
Mobile money, maybe in the emerging markets, like we're seeing with M-Pesa and so forth. But yeah, I think so. Yeah, well, I think it's
good point.
Super interesting discussion. Maybe we need a Libra episode as well in the future. Let's see. Now it's time for the last topic of today, and we're going to keep it brief since we're kind of already up against it on time. But I did want to kind of bring this up because it really seems like some of the classic financial services companies are still on the blockchain bandwagon, believe it or not, because the hype has been kind of calming down a bit. So from Forbes magazine, I read this article that Visa, the card network company, has applied for a digital dollar blockchain patent. And they've filed a patent for, and quote, to create a digital currency on a centralized computer using blockchain technology, end quote. I'm going to just leave that there for a second for you guys to comment, and let's see where we end up.
It's interesting. It's a strange situation, but I get you get a lot of this in this space. How many people apply for different types of patents all over the place, and you look at them and you think, what the hell are you doing? Like, where are you going with this, right? And and I guess that's my initial reaction is like, wow, what does it come to when we've got?
Yeah, I think I'm going to have to give Visa the benefit of the doubt that there's probably some really smart idea behind this, but the way this reads, it's like the cliche of blockchain is that when you're creating a block. How was it that the saying goes? There's only so much fun you can have on a blockchain of one. Because that implies that what you've done is that you've done the world's most inefficient database in a single computer, and but yeah, I think again there has to be something behind this more than this. But I guess this is just a funny way of pointing out that building a centralized blockchain is a bit of a redundant topic in my mind.
There has to be something more behind it. I read through it as well, and I'm not a patent expert, but from my understanding, your idea has to be novel and non-obvious to be able to get your patent approved. I'm not quite getting here what it is that's non-obvious and novel, and where they're demonstrating something as not having prior art. But I'm not an expert in the patent area, so we'll have to see what happens. It would be interesting if it does get approved and a patent is granted to see on what grounds and how that impacts the sort of whole area of digital currencies.
All right. But good. So we're up against it on time. So unfortunately, it is time to close this episode 2 of Fintech Daydreaming. Again, thanks to our wonderful guest, David Grundy. David, how can people reach out to you in social media or otherwise?
I guess I'm a little bit old school in the sense I'm probably, I don't use much of them at all except for LinkedIn, to be honest. So LinkedIn is the best way.
And of course, thanks to my wonderful co-host, Paul. Paul, how can people reach out to you?
They can reach me through LinkedIn as well, the same as David. I'm also on Twitter, but predominantly on LinkedIn.
You can reach me on Twitter at Ville_S or on LinkedIn, just like our other people here on the podcast today. So I hope you have enjoyed this episode too, and hope you join us for the next episode when we actually might get to our promised discussion about the banking as a platform conversation. So see you hopefully in 2 weeks. Thank you and goodbye.
Thanks, guys.
Thank you.
Thanks.
Goodbye.
Bye.